Hello and welcome. My name is Stella Tokar, and I am pleased to be your host today for Around Town. It's a program that's going to be featuring a lot about your community that you live in. Today, we're pleased to have with us Tropical Financial Credit Union, and Pete Valeriotti is going to be our guest today, giving you a lot of information that you're going to want to stay tuned for. So, thanks for being with us. Well, Pete, thank you for being with us today. We're very happy that you're here.
Thank you. It's great to be here. Thank you for having me.
The thought that's on everybody's mind today is about the bailout, the government bailout that is being formulated. Really, how does that fit into the grassroots economy?
Initially, the bailout plan was really designed to help the banks on the theory that if the banks were helped by the government, the banks would lend more and be a little bit more flexible with workout plans. But the feeling now is that initial strategy is not going to work. And I think the bailout plan is being rethought in terms of getting to the grassroots level, helping the individual homeowner. The initial bailout plan, again, was not designed to help the individual homeowner. But again, now that we see the severity of the situation, as we speak, the government is rethinking the plan and how can they get those monies out to the individual homeowners. What kind of programs can go out to the individual homeowners, like homeowners in the City of Miramar, and get them the help they need to stay in their homes.
If a person is having trouble with their mortgage, what is the first thing that they should do? What direction should they take?
The first thing they need to do, and probably the most important thing, is to contact your bank or your mortgage company or your credit union, whoever you have that mortgage with. If you feel like you're in trouble on making that payment for your home, contact your mortgage holder right away. Don't delay. That's the single most important thing a homeowner can do. And too many times, homes go to foreclosure without the homeowner making a first call to the mortgage holder. 50% of the foreclosures occur without the homeowner ever contacting the mortgage company.
50%.
Over 50%. There's a fear factor there in terms of, I better not let the institution know I'm in trouble because then they're going to take my home. But that is exact opposite of what really occurs.
So it's never too late to make that phone call then.
The bank does need to hear from you because the earlier they hear from you, they can try to work something out with you. If you've waited until you're 30, 60, or 90 days delinquent, it's getting late in the ball game and the foreclosure process may begin to start. And you don't want to get to that point. So at the first hint of trouble in making your payments on your home, let your mortgage company hear from you. Let your credit union or bank hear from you so we can have a discussion, a dialogue, determine your income, determine your expenses, and decide what payment can you afford on your home, how much equity do you have in your home, and is there a way to work something out for you to keep you in your home. Banks, credit unions, the government, they do not want these homes back right now. From their standpoint, foreclosure is absolutely the last resort. It's the option of last resort. We want to keep you in your home. If you contact us early, it gives us time to fully assess what opportunities we might have to keep you in your home. So contacting the credit union or bank early is the first step. If after you do that, you see that it doesn't look like you're going to be able to afford to keep that home, then there's other options available. You might need to sell the home. The bank may agree to a short sale. Short sales are common right now because property values have gone down so much in South Florida that in many cases the balance on the mortgages is higher than the value of the property. And in that case, you might get a sales price that does not even cover the mortgage balance. If it's close enough or within a reasonable amount, and every case is different, the bank may agree to that sale even though the sales price does not cover that mortgage balance. And they may even forgive you for the remaining balance on the mortgage in a short sell situation. Not always, but sometimes that may be an option.
So what is the best mortgage for a person to look into?
A lot of homeowners are in trouble today because they chose products that were not safe. The best product is the traditional 30-year fixed rate mortgage, your conventional mortgage. Those are the best. The old-fashioned 30-year fixed rate mortgage. It's safe, the rates are great, you don't have to worry about payment changes. The problem with many products out there previously were these option R mortgages. They were adjustable, they didn't have caps on them, the payments and the rates went up in very high amounts, and homeowners were not able to afford the new higher payment. In many cases, those option R mortgage payments went from $800 up to $1,500. And when the homeowner realized they couldn't afford the new payment, they were faced with refinancing or getting out of the home, and those option R mortgages had high prepayment penalties on them. And that was a big factor in trapping people in their homes. So clearly, the best option is always the 30-year conventional fixed rate mortgage.
So this is one time that the old-fashioned way to do things really works out for everyone, doesn't it?
Yeah, that's the truth.
How can a homeowner avoid getting scammed or getting caught up in some of those scams?
Great question, Stella. In today's market, that is a big potential right now. The people who are at greatest risk of losing their home, the people who have the least amount of financial wherewithal, tend to be the biggest targets for predatory lenders. These are lenders and programs that prey on desperate people. And what they are simply is they are loan products that can cause you to lose your home. They have hidden clauses and high-risk clauses. They have payment changes in them. They have big upfront fees and service charges. And they're sometimes offered and always offered by dishonest companies that are not reputable. Typically, you will see an ad either on the radio or a flyer, and it usually starts out with bad credit, no credit, let us help you.
We see a lot of those.
Those are the ones that you want to run for cover on, because those are the ones that they'll try to make it sound like a great deal. They're going to help you stay in your home. They're going to help you manage all your payments. And typically, in many cases, they will ask you to make one payment to that company, and that company in turn offers to make all your payments on your behalf. But in a predatory lender situation, and many times they don't make the payment at all. They will keep the money or just pay some of the money. You need to stay in control of your mortgage by always making your mortgage payment. Even if you're in some type of a rescue plan, you always want to make your mortgage payment directly to the mortgage company, not to a third party who's going to make it on your behalf. So the bad credit, no credit offer is typically that predatory lending program that you want to steer clear of, because in many cases it's going to increase the likelihood of you losing your home and further damaging your credit. If you're being pressured into doing something today, you have to do it today, because if you don't do it today, you're going to lose the rate, you're going to lose the program. Any high pressure tactic like that is a sign that this is a predatory lending situation, because there shouldn't be any pressure put on the applicant to make a quick decision. So that's a sign. Another sign is big upfront fees. Typically, a trusted lender is not going to have big upfront fees. A mortgage application might have either no application fee or maybe a $300 or $400 application fee upfront at the most. And typically, that fee will be applied towards the closing costs when that mortgage closes. Or if you cancel out very early in the process, maybe before even an appraisal is done, that could still be refunded to you. A predatory lender will charge you a big upfront fee, maybe $1,000 or $1,500 to get you started. And if you see a fee like that, that's another sign it could be a predatory lender.